Alright, good afternoon, everybody. What's up, guys? Guys and gals. What's up, what's up, what's up? Alright, we're live on the YouTube. We're live in the virtual trading floor. So let's get at it. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is roughly the same. I'm not an AMC anymore. Really, it hit my target, and I was keeping a small position to see if I could get a further move, and I liquidated it. Everything else is the same. Going over to the charts. So let's start with the market. Really just a bearish consolidation day. The biggest disappointment for me today was the IWM, which was relatively strong pre-market, becoming relatively weak basically the second the market opened. Qs were able to catch a little bit of a bid, and the IWM just sold off. It's not what you want to see. The market price action, the intraday price action for the market, just very, very boring today, regardless of which index you're looking at. Again, really just kind of a bearish consolidation day after Friday's weakness. And it was still another day where there seemed like there was a large dispersion, though. Like, even though the market did nothing, there were stocks out there getting destroyed. There were other stocks out there that were performing really well, and it just led to that push and pull of individual equities and sectors. Just caused the market to really do nothing here. But let's take a look at where we closed on the day, and let's take a look at our big picture to get an update. The S&P, the SPYs here closed up 0.1%. The Qs closed up 0.05%, and the disappointment here, the Russell 2000 closing up 0.6%. Definitely where the disappointment is. Again, considering the relative strength it showed pre-market and the importance of that index. What we discussed in the morning meeting today was kind of the push and pull of Friday being like a day one downside as we came into that options expiration, and as we come into this potential window of weakness here for the back half of September, seasonally, just very weak period of time. And that options expiration can loosen up this market potentially. So we had called for, even though Thursday last week was a really strong day and we were starting to try to break out of this wedge to the upside, even though the technicals were starting to look pretty bullish as of Thursday, we have had a pretty consistent discussion here for the last week plus about the potential weakness that could come in on Friday, which was a historically large options expiration day. I think it was the largest September options expiration day in history, and potential of downside follow-through, just more based off market dynamics in some ways than technicals, though the technicals will eventually confirm those market dynamics if that's going to be correct, as options expiration unwinds, as it happens, and potentially if you start getting wider movements or some sort of negative gamma, or this market breaks down and the VIX increases, how it could just become a feedback cycle of selling into the back half of September. So I'm still kind of nervous about this market. Technically, even though technically we're still intact, but really just more fundamentally and from the perspective of market dynamics, though I'm still 100% long, and I'm probably longer than I should be. With that said, almost all the positions, definitely not one of them, which we know which one that is, I'll talk about it, are in these win-win situations where I'm really just kind of giving back open P&L that I've made for the most part, with an exception or two in there. But what we talked about in the morning meeting was kind of the push and pull between the fact that the market is still above this consolidation support from this tighter consolidation we've seen throughout the month of September, but that Friday is a negative Maribozu into that support. It's a day one. It's on high volume with the weak seasonality, that we could be getting set up for a breakdown in the marketplace. So, you know, again, the push and pull is, does support hold? You know, technically today was a very small common gap down into a support level. That's something that you usually want to buy. But do you really want to be buying right after that options expiration, after that negative Maribozu that came in on the high volume there? So that's kind of the push and pull. And really, at the end of the trading session today, what we're looking at is just a bearish consolidation day. So it's not helping the bulls in any way. In fact, it's potentially helping set up the bears a little bit further. One thing that we had noted from Pat's note this morning was that short-term tactical was just about in the green zone, though it wasn't quite there after Friday's close. So this plus a gap down or opening weakness this morning would have you down there. It tends to be a little bit supportive, but like what we saw in August, you can get 3 days in a row of heavier downside selling into that zone before you get some sort of bounce back that actually comes in from the market. So so again, the fact that we sat here pretty much at the support level all day and consolidated it after Friday's weakness is a bearish setup. So watch how we gap in the morning, but if we lose the low from the 7th, that support zone I was talking about, 442.75, we got a bigger issue / today's low, which is just below that, 442.56, but we did manage to close above it by a couple pennies. So that's the SPYs. The Qs here, you know, very similar situation. That Q level we discussed is 369.15. It's basically a bearish consolidation day in front of support. So same push-pull. We're above support. Obviously, that is supportive. That's why it's called support. But it's really just a rest day after kind of a breakdown candle on high volume from that options expiration. And then the biggest concern is really this IWM. We finally got a real close below the 200-day in the IWM for the first time. It's been the consistently relatively weak index. It represents more of your average stock that's out there. So, you know, you can't have Apple hold up the IWM in the same way that Apple can hold up the SPY. It's a broad support zone between 182 and 183. So I've never been a big believer in closes above and below the 200-day as particularly important. I think the slope of the moving average is more important than closing above or below. And it's a flat slope for the 200-day. It's a flat moving average, so that represents a trend-less large time frame for the IWM, as opposed to the SPYs, which are clearly in an uptrend, and you can see that with the rising 200-day, which is my gold line there, and the Qs, which are clearly in a large time frame uptrend, and you can see that with the rising 200-day there as well. And there's actually a pretty large spread. Back in July, I remember reading a statistic at highs there, that the spread between the 200-day and the index was like some of the highest that it's been, which was just one additional layer of probability when we started calling for the short trade on the market back at the end of July, which turned out to be a really good trade. So the IWM, a concern with the close below the 200-day. I'll be much more concerned with the close below 182. And honestly, close below 182, and this market's starting to look both short-term and intermediate-term bearish, which we haven't really seen that in a while, but we're not there yet. So all in all, I would say that today was a bearish consolidation day. It's further cause for concern. The continued weakness in the IWM is absolutely a problem as well, and we'll continue to monitor that situation as we go into the Fed day on Wednesday. So that's that. As far as trading today goes, I actually didn't think, despite the market being this gross, I didn't think it was a terrible trading session. You just had to really, really pick your spots. You had to be patient, really wait for the setups to come in, and if you did that, I actually think we had a pretty high hit rate on the callouts in the VTF. The first time I really called out any real longs was at 942 here, when the pivot low came in on the Qs. That coincided with an extension bounce with the IWM that we were looking for. Because the IWM, if you remember, I was just talking about it, was very relatively weak off the open. So by the time this, was this the fifth bar comes in that breaks new lows. We talked about this potentially being a 5-minute RDR back up just off extension, given that it was 950 and you got some extension from the ADMA. And the Qs, which were showing relative strength at the same time, were given a quick dip tail. We called out a bunch of longs off that 945 low. The one that I called out, which I think was best of all of them, was Google off that low. Google had great strength. Again, you can just see as we type up some of these stocks, the dispersion in some of these equities and some of these sectors, just because you look at this Google chart at the beginning of the day. I mean, this thing's trading great. Then you look at Tesla, which is actually also one of our long calls at 945. I know Josh and Brant were all over that, just off of the volume increase and the extension that was kind of coming in. And that's just two stocks within tech itself. Obviously, Tesla had a bad headline that was out there this morning that helped the weakness, and Google's daily chart is just phenomenally strong. This was one of my ideas of the day, was to watch it for the inside and up. The opening strength came in right away. I think we called out that actually versus Lowe's as the first long. The second long was off that 945 when the IWM and the Qs were supportive of the strongest stock that was out there, which was Google. At the same time, again, you had the extension trade coming in Tesla that Brant and Josh called out. There were a couple other ones. This AMD was tricky. I called it out off the 940 low first. That pushed through and failed. The second one worked, which was also called out. NVIDIA gave that higher low that we were looking at in there, and that eventually worked its way higher and filled the gap. And I think there were even a couple other names, I'm forgetting what, that kind of, it just escapes me now, that also worked at that 945 period of time. A little bit later in the day, also paying attention to the market at 10:35. I know there was a couple other longs that were called out that were great. Apple versus this low at 9:35 was called out after more of a 15-minute correction. I'm trying to see what, if anything, I liked about at the market at that point in time, and I'm not seeing anything in the market that stands out to me. But I remember calling out Apple and one other name at 9:35 for bounces here, and that was another trade that gave great follow-through. So. Again, there were some really good trades out there. You just, I think, really had to be patient and pick your spots and focus on relative strength and relative weakness. Because, again, Apple, another one, just incredibly relatively strong, up 1.6%. There were some other ones that weren't that bad. Palantir, for a growth stock, was green all day and was really trying to hold in. We keep noting the relative strength in Palantir compared to some of its growth peers as a stock to focus on. I've almost fully liquidated this Coursera position finally, even though it's breaking out of another bull flag. So again, a lot of really good stuff that was out there. I had a great trade in Unity at one point today, and another trade that I'm just sitting here and being totally dead wrong on, which is this Chewy, and it's worth mentioning as much as I'm getting sick of talking about this name. I started looking at this thing 4 days ago because of the extension. And this is the thing that I talk about it all the time, and this is just a great example of it in practice, even if I'm getting caught in it a little bit, is that a stock that seems extended or almost irrationally oversold or whatever can always sell further. The ultimate example that I always like to point to people who like to trade counter trend, and I trade counter trend, but I greatly prefer to trade with trend. Though once in a while I like to torture myself by being involved in those counter trend trades. And those counter trend trades can pay you if you pick your spots and you manage your risk. One of the ultimate examples I love pointing out was just this Zoom move back in 2020. Not Zoom, sorry, JKS, Jinko Solar. I mean, this thing was just so crazy. Like, stock is a $21 stock and has a breakout through 24 on volume on the 21st. 2 days later, it's at 34, and the ADMA is at 26.70. So you've got a lot of extension there for a $30 stock. It takes 1 day of rest and doesn't even let the ADMA fully catch up, and then continues just 1 day after the next. I mean, this is like a 7-day up move before it gives one more. You keep, if you're just shorting the whole way up because you're like, oh, it's extended, it has to correct, it's extended, it has to correct, it's extended, it has to correct. By the time this thing actually decides that it's extended enough to correct, it's at $92 and you're bankrupt, or $90 and you're bankrupt off of a move to 26. I find that this tends to be worse on the short side of the market, especially if you're shorting growth or things that are high short float or whatever. They can just really squeeze the heck out of you, even if at a certain point it's irrational. But it can happen on the other side of the market too. It can happen on the long side of the market if you're trying to pick bottoms. I'm like, that Chewy chart doesn't look right because it's old. And you're seeing that with some of these retail names broadly. You know, like this Dollar Tree is just continuing to get smoked. Dollar General is continuing to get smoked. Macy's is continuing to get smoked. And this Chewy is continuing to get smoked. So, you know, I started looking at this thing about 4 trading sessions ago because I'm looking at what I thought was a decent company and people love their pets. And it's trading at, you know, $40 and gets cut in half in, you know, a little bit, not even 2 months. You know, stock had that earnings report down here and sold off further on the 31st, consolidated for a few days, and then basically had a gap and go to the downside. It was just continuing and continuing. And the incredible part is on Friday with market's weakness, this thing actually broke this 45-degree angle descending channel to the downside. That's impressive. It's hard to get, you know, 45-degree uptrends that break to the upside or 45-degree downtrends that break to the downside, though again, it can happen. And you know, I've been looking for the oversold bounce in this thing. I probably got a little bit big-headed with the money I made in this AMC trade that I was pretty big in, just looking for that snapback to the 80 MA on the daily, which I got almost perfectly. I was actually looking for a little bit more of a price correction, a little bit less of a time correction, but it was a very profitable trade for me. And this Chewy is a very different story. AMC was going through that at the market secondary offering. Chewy is not doing that, though it did have the mixed shelf offering hit on Friday at the close, but figured I could just kind of repeat, like, oh man, look at all the people that have been suffering in this Chewy for all this time, and it's now finally cut in half here, and I can come in and start buying this thing in the low 20s and see if I can get a bounce back to, you know, 24 or something like that is what my thought process was. And the trade's just been completely wrong. It broke the channel to the downside, got further extended, the volume increased, it picked up this morning. I mentioned that it was still going to be on my radar today for another trade, but I also mentioned that, you know, again, it's just like what I was showing with JKS, but in reverse. A stock or a market can remain irrational longer than you can remain solvent, and I honestly can't even call this Chewy irrational. I think the sell-off is insane, but fundamentally the stock is still very expensive, even at $20. I, you know, tend to think that markets don't work in straight lines. So that's where you can have an advantage as a counter trend trader. You can have an advantage by, you know, coming in on the other side in periods of large and extreme extension. That's generally the only time I like to trade counter trend, is in a period of large and extreme extension. And the thing about large and extreme extension is that those are relative terms. Large extension can become larger extension. Extreme extension can become even more extreme extension. Again, using JKS as an example, and now, you know, kind of getting this Chewy a little bit in reverse. So it just calls for what we all know, and what I remind everyone at the beginning of every morning meeting, which is you have to manage your risk. Risk management is 100% the key to success in this business. I have seen people who are excellent traders not be successful traders because they fail to manage risk and manage money properly and consistently over time. And truthfully, I've seen people that are mediocre traders be able to make consistent money because they manage risk and they manage their money well enough that they're never putting themselves in really bad spots. So it is one thing to be wrong and have a trade fail. It happens to all of us. You know, it's something else in how you manage it. And I don't think I've managed it terribly, to be honest, but I would say I haven't managed this trade as well as I would have liked either. I've gotten way too heavy and too aggressive in certain points where I thought we would get a bounce, and the bounce never really manifested. At least what I'm trying to do now is make sure that I'm buying it on the way up. Like, I didn't really do very much with Chewy today until this uptick came in at 11.20. and I was like, okay, look at that. There's a solid uptick kind of coming in, and I followed through on that uptick with a pretty big buy at $19.59. But I never got any follow through. I was never able to sell any, and I could see within the tape. And again, I'm not big on advising people to be tape readers, but it is a skill that I have. I could just see within the tape on this thing that the seller wasn't done. The only thing that changed midday today is that some buying came in to be supportive, and it created almost like an equilibrium for a few hours there between that seller who's still selling, which is pretty wild, and the new buying that actually came in. But then that buying failed and it gave way, and it broke down further to new lows, and the stock has another it's crazy that it closes on lows every single time too. You're looking at 1, 2, 3, 4, 5, 6. You're looking at 7 trading sessions in a row where not only have they all been red, but 6 of those 7 trading sessions the stock has actually closed on dead lows. So it's just really, really impressive weakness. We're seeing that in a lot of the retail space in general. I still do not think that the pace of selling in this stock can continue unless it wants to go straight to zero. I mean, it literally can't continue, because if it did in another month and a half, the thing would be at zero if this rate of selling increases. So I don't think that the rate of selling can continue, but it's like I said in the morning meeting, I'm still going to be watching this Chewy today to see if I can get an oversold bounce, but it could go to 17 before it does it. So if you're involved, make sure that you're executing properly, make sure that you're putting your stop losses in, and make sure that you are managing risk. Honestly, my biggest concern about this position, and I still do have a position in it, really isn't Chewy itself. It's actually the market itself. I'm more concerned that when this Chewy finally attempts to, find a floor because the seller's done selling or some buyers come in, to take advantage of this extension, that I'm looking at a market that's actually breaking down through those support levels that we discussed in this potential post-OPEX window of weakness that doesn't allow this thing to actually bounce when it finally decides that it wants to. That's actually my bigger concern with the stock, and less so the stock itself. But yeah, just make sure that you're managing your risk on it properly. So that's all that I've got. I'm happy to answer any questions that you guys have. I'm just reading Dimitri's comment on Chewy. There are 1,240 publicly traded U.S. companies with a market cap over $3 billion. There's only one company that is trading 30% below its 50 simple moving average and 40% below its 200 moving average, and that is Chewy. Nice. So yeah, so arguably, based off Dimitri's tweet, you've got the worst. I mean, it's not even arguable. You have the worst $3 billion plus market cap stock in the market is specifically with this Chewy. So yeah, so not great. Thing is absolutely getting destroyed. It's at all-time lows. But like I said, I'm happy to answer any questions that anybody has. Scrolling through here, not seeing a lot. Ben giving me some props on my Google call off the open. Nice. Hope you're involved. NEO announces a proposed offering of $1 billion in convertible senior notes. NEO's getting smoked on that. Eddie Vick saying, if the Fed continues its hawkishness, I don't see how retail will have a reason to cover. Will have a reason to recover. I agree with you, unless, if the Fed pauses and the market's already priced that in with the way that they've sold these things. The stocks could be, because they're forward-looking, could be ahead of themselves, and retail could recover to some degree. Rex asking me about coin. Yeah, we had coin on the radar today, and the crypto names in general, because Bitcoin was gapping up so big. I was not involved. Mara was the worst one. It was super weak early, but it looks like Riot filled its gap as well, and this coin was also weak. I know we were looking at coin above 84 today. It was talked about in the morning meeting. It ticked above 84 this morning and failed. So let me read your question. Took coin long this morning after the open at 9:35, using the opening low as my stop. On Friday, OPEX coin was the one holding best compared to the market and other stocks on the daily chart. 84 was a very clear level building out. This morning, coin was showing relative strength pre-market along with Bitcoin strength. At the open, it ticked below 83 and bounced back, so I took my long there, understanding there was still some space from equilibrium. However, coin was trading with relatively high volume in front of 84 bucks. I saw that the Qs were strong at the open, thinking if coin could tick above $84, the equilibrium would catch up immediately. But coin ticked above 84 and immediately sold back down. So my thought process correct on this trade was worth taking. Yeah, I think your thought process was 100% correct. I think the trade was absolutely worth taking. You had a lot of layers of probability on the side of your favor. The market just was not supportive for most stocks. I don't know what breadth numbers look like today, and if anybody has them and can post them, I'd be curious. But this is one of those days where the S&P closed positive. It's up 0.1%, and I could just about promise you that breadth is negative. They wrecked a lot of different things out there. Like energy was able to finish positive, financials were able to finish positive, some big tech was able to be positive, like Apple, but a lot of growth tech got destroyed. The KRE regional bank ETF continued to get destroyed. I definitely felt like I was looking at a lot of really, really weak names out there, and then like a handful of really strong names, which just goes back to this theme of dispersion that we've been talking about a lot recently, where your market movements and market volatility have stayed really tight on a lot of trading sessions, including today. But some of these individual names are just moving in different directions. And it just so happened that almost all growth names, except for maybe Palantir and maybe Coursera. How did DraftKings close? Oh, that was the other one. That was the other one I missed when I was doing my recap. This DraftKings call off this low was a great call intraday today at 9:40. Really, really good trade. So there was like a few growth issuances out there that showed some degree of strength, but most of these were really, really bad. So I just think that they sold down Bitcoin for whatever reason, and I'm no crypto expert. I hate Coinbase as a company, but I'll trade these names once in a while just if they seem like they're in play. And it seemed, it was gapping up really big. It seemed like it was being supported, and they sold down crypto, they sold down coin. Trades didn't work. But you identified a lot of pieces of information that were on your side of the trade, and you went with it. So I like it. Bandit saying Chewy, I just looked it up. It has no debt, $900 million of cash. But insiders are consistently selling. Yep. And Tom K saying that the Chewy daily RSI is 14.75, which is the lowest reading since the IPO. Also an area where it tends to bounce. Where's the next support on Chewy? There is no support on Chewy. It's trading at all-time lows. From Brian L. I saw that you had a great call out in Unity today. I got lucky in Unity because that news hit after I had already bought a bunch. Moved with the dollar. Could you explain why you were in the trade? It just so happened it was big news as well on the bounce. Sure. So Unity is a name that I've been consistently trading for a few months now. Did really well with it on the way up. Got out of it on the way up before it got to highs. Felt it was too expensive up there. I didn't touch it. I started getting back involved on the way down somewhere in here. Made good money on it actually as it rounded up. I got 100% out of my position above 38. Got back into it at 38 on the way down. A lot of volatility over the course of the last few trading sessions with all the news and drama that's been going on around that Unity with the price increase, and they're getting death threats and everything over it. And then it had an upgrade on one of those days, and then today for whatever reason the stock was just getting absolutely smoked. I don't think there was any new news on it. It could just be catching up to, market participants taking the weekend to really digest what happened at the end of last week with those price increases. I know we got a couple people here on the team who are pretty knowledgeable about the gaming space and have provided us some good information, and they seem to be pretty negative on it. For me, I have a position that I'm managing positive open P&L around, but all the same, when I initially saw the gap down this morning, I didn't touch it. I didn't buy back any stock. I was trying to be really patient on it, and then it was only on the way up after it put in this little higher low at 11.35 that I added a whole bunch of stock back. And again, that was really more of an add back than a long, but I had avoided buying some, and I bought a bunch of stock back pretty much all at once. I see Dave S. Relevant tweet for this Unity from Sunday. Let's see here. We've heard you. We apologize for the confusion and angst. The runtime fee policy was announced on Tuesday caused. We are listening, talking to our team members, community, customers, and partners. We're making changes to the policy. We'll share an update in a couple of days. Thank you for your honest and critical feedback. That's the tweet from Dave. Yeah, I don't know how the market would even interpret that. And then what we saw, so I'm already in, and this news hit, I got lucky. So I had offers up to 34.49 was my highest offer. I went to 34.52. So I got double lucky with that high. I got 3 cents off highs into that pop. This is when news hit at 12.55 today that they decided that they're not moving forward with the price increases or something. So it's like in theory that should bring the stock back to where it was before they announced that news, which is like 38.50. But like we saw with Apple, when China refuted that they're not allowing government employees to buy iPhones, it oftentimes doesn't work that way. And the first thing that I said when I saw that was like, at this point I almost, I'm no expert on this industry at all, so who am I to really say anything? But at this point, I almost feel like you got to go with it. Like this company, they made a business decision for whatever reasoning is behind that business decision, and they got to go with it. They're getting a lot of negative feedback and all this stuff, so they're just kind of caving. But I almost feel like the reputational damage is done. They made a lot of gamers really, really angry, I guess, with that news. So I mean, are you just gonna backtrack on that? I don't know. So I was like, wow, if they're not even gonna move forward with this, somebody needs to get fired. And they fully negated that news, which did surprise me. I thought, I didn't think they were gonna bounce it back to 38.50 off that, but I was very surprised that they fully negated that news when it hit. But that's what happened. They broke that opening low of that news event, which means that the market doesn't care about it, and then the stock stayed sloppy and choppy and weakish kind of the rest of the day. So that's pretty much it, Brian. No real genius, no real amazing trade in there. I was waiting for an opportunity to add back stock into the broader weakness. Was patient with it off the open, and happened to get in after I felt more comfortable with it. Not buying on the way down off the open, was more comfortable with it, so the higher low, and I got a little bit lucky with a couple of good fills when that news actually hit. But thank you for the question. From Joanna, regarding Chewy, do we know how sensitive pet spending is to disposable income? I don't think anyone's going to stop feeding their pets, but maybe fewer people get new pets. My point is there a growth problem in the industry if people are starting to feel less well off long term? If that's the case, and Chewy doesn't have a solid balance sheet and or long-term plan, I haven't checked, maybe someone out there is thinking it's a candidate for bankruptcy. Sure, so I actually did a decent amount of research on this off the open. So is SoFi popping right now? Just one quick little uptick. I just got filled some SoFi. So pet ownership went on a decently large increase from the historical average during COVID, and it got up to, I think what I read over the weekend is 70% of U.S. citizens own some sort of pet, which that's a pretty high number, but I guess, okay. And that recently has declined from 70% to 66%, and it's more of a normalization, though, than anything else. Normalizing back to where, I honestly don't remember, but I remember that the statistics were that it was an uptick in COVID to 70% of people that own pets, and now we've downticked back down to 66%. And there is absolutely a sensitivity from pet owners in how they spend on their pets in regards to disposable income, if that is moving down, and it seems like that's what's affecting retail broadly in a lot of ways right now also. But the counter to that, from my understanding, and I'm not a pet owner, but just doing some research over the weekend, is that I think what I read was that Chewy has a really good market in lower cost pet food. That they have like one of the best price points that's out there. So in some ways, actually, the reduction of disposable income and having people move more towards cheaper food alternatives can actually be a benefit to Chewy. Is really more what I was reading. So you got that in combination with a company that has a path to profitability, though their growth has slowed. They have a path to profitability and zero debt on their balance sheet. So I do not think it's a bankruptcy candidate or a zero candidate. One thing that is under the surface a little bit, and I don't like getting into conspiracy theories or really speculating, is that Ryan Cohen guy is involved in this thing. And I remember, we can't pull up the chart of Bed Bath & Beyond, but it was so clear as day that guy bailed himself out with when he was stuck in that Bed Bath & Beyond, when it was like trading at like a few dollars and was very clearly, very obviously working towards bankruptcy. And I don't even remember exactly what he did or how it played out, but it was so clearly not kosher the way he kind of pumped that stock up, and it ripped all the way up to $18, $19 on whatever he said or did. He sold 100% of his position in that, so he bailed himself out, I think to the tune of billions of dollars, $1 billion plus. Again, fact check me on that, I'm not 100% sure. And then was out of the position, and the stock proceeded to work its way down to zero and go bankrupt. I mean, to me, it seemed flagrant. I made a lot of money in that Bed Bath & Beyond move on both sides. I caught the long in that move, and then I flipped short at like $18 or whatever on the upside because it was so clearly a BS situation, and the stock was going bankrupt. So that was a good one for me. But he's the largest shareholder in Chewy. So if there's anything going on there that's forcing him to sell, that could certainly be adding to this weakness, especially, people know about it, or front running it, or whatever it is. So, but still, that's, selling isn't going to change the fundamentals of the company. With that said, it trades at very expensive valuation metrics. Chewy does. So there's certainly room, just from a fundamental valuation perspective, for this thing to go lower. But I'll tell you, if you liked it at $39 and didn't think it was too expensive at $39 to own it, which clearly some people did, then you kind of have to like it at 19. Yep. So that's what I got for you on Chewy to answer your question, Joanna. I appreciate the question. Manish over on YouTube wants to know why gold keeps going up. I don't follow gold super closely, and it doesn't look like it keeps going up and up. It looks like it just had 2 strong days in a row, and it's stuck within a really big picture consolidation. Where are the gold miners trading at? I kind of like the gold miners a little bit. As like these energies and material names start to improve a little bit, but it's worth keeping an eye on this gold if inflation's increasing, or there's a fear trade that comes in. The TLT tends to perform better as a fear trade than gold does historically. Boeing straight down since August 31st. Yeah, Boeing's been getting smoked also. Eddie Webb saying, side note, watch Pet Fooled to see how gross the pet food industry is. My dogs have only eaten raw their whole life, which I make or get elsewhere. Not sure Chewy carries raw, but there is something going on. Yeah, I really don't know anything about pet care like that. I can tell you that my neighbor in Idaho basically just feeds his band of 7 dogs, that one of which bit me once, carcasses. So I guess that's as raw as you get. It's like one of the calves doesn't make it, sends the dogs for it, or when a new calf is born, sends the dogs out to eat all the afterbirth. So that's the pet food he uses. That's good times. Can't wait to be back there for that. No, they didn't put the dog down for biting me. Can I look to see at snow? Sure, we can take a look at snow. I like snow. This is another one that I like the company, but it had traded pretty expensive in the past. It's a little more okay now. I like that it filled the gap here. So I like snow long off this 160 area, provided that the market holds in though. And that's my continuous big concern right now is like every morning when I'm seeing trades that I like potentially. That included this morning. I see trades that I like. I see ideas that you guys are calling out that I like, and I just then look at the market and I want to get through this period before I aggressively put on any new longs. But I've got too much long exposure on right now. I'm looking for an opportunity to piece out of some long exposure, but the market's not giving it to me. So I prefer to do that on the upside than on the downside. And I really don't want to liquidate this Chewy position into this extension. But I got to make sure that my sizing is appropriate because, like I said this morning, and I'll say it again now, I don't think this rate of descent can last, but it could continue to 17 before any sort of real bounce actually occurs. So be careful. Bandit. Eddie Vick saying Chewy could be a very good 2250 by 25 bullish call vertical spread play. I'm willing to bet on it for next month expiration at this oversold condition. Risk is $130 for 2K. Okay. All right, gang. We'll wrap it up there. As the great Patrick would say, we'll see how we gap and we'll take it from there. Is that what he says? See how we gap tomorrow and we'll take it from there? I don't know. I'll never be Patrick. Have a great night, everybody.